Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome to Trega's Financial Insights. Today, we're talking about the U.S. stock market and whether a bubble is brewing. Well, Wall Street strategists are rethinking their views on what constitutes the new normal as the S&P 500 approaches historic highs. We've got valuations nearing levels seen during the dot-com bubble era, which might raise some concerns about overvaluation. But not so fast. Despite high valuations, many experts believe they're justified by accelerated AI adoption and robust earnings growth. Savita Subramanian, an equity strategist at Bank of America, is one of them. She suggests we should view today's P/E ratio as the new normal rather than expecting a reversion to historical averages. Now, you might be thinking, but what about the past 5 years? Didn't large-cap tech stocks dominate market capitalization and earnings growth? Sam Stovall, chief investment strategist at CFRA Research, says that when we look at the forward trading price of the S&P 500 on a 5-year horizon, it's actually more reasonable compared to long-term averages. The premium might seem high from a multi-decade perspective, but in today's tech-driven market structure, it's a different story. The debate over valuations has spilled beyond Wall Street and into the wider investor community. Even Federal Reserve Chair Jerome Powell acknowledged that markets appear quite highly valued, drawing comparisons to Alan Greenspan's famous 1996 irrational exuberance speech. But here's the thing, while valuations might seem high, some experts believe it's not necessarily a sign of a bubble. Sonali Basak, chief investment strategist at iCapital, points out that investors who stayed on the sidelines during previous market downturns missed out on significant gains. Barry Ritholtz, chief investment officer at Ritholtz Wealth Management, warns against trying to time the market top. Your chances of success are slim. Ed Yardeni, a Wall Street veteran, notes that corporate earnings have kept pace with stock prices, and future earnings and revenues will continue to rise. Gene Goldman, chief investment officer of Cetera Financial Group, says the market has had a wonderful run, and any pullback is an opportunity to buy on the dip. So, what's the risk? Some experts think it might be a melt-up rather than a crash. With robust GDP growth, strong consumer spending, and idle funds waiting on the sidelines, the stock market looks quite good. Goldman Sachs highlights that the greater risk is everyone jumping in aggressively to buy, a melt-up. That's all for today's Trega Insights. Stay informed about the U.S. stock market and make your own investment decisions based on the information you need to succeed.